Hello, and welcome for our next nap. My name is Irina Oishkova, and I'm your nonprofit auditor. I designed these naps and nap stands nonprofit auditor points to help nonprofit communities to demystify some accounting and finance issues. This is my giving back to nonprofit community for many years. That I've been lucky enough to work with nonprofits serving as auditors. And in my daily business life, I encounter a lot of questions from nonprofits management, board, and accountants that I realize that these naps can actually be very helpful and hopefully provide some useful information to nonprofits. Before we start, I want to make a full disclaimer. These videos are not authoritative in nature. I am certified public accountant and I do have my own CPA firm located in downtown Oakland. However, I'm not a licensed educator and I just simply sharing my knowledge, experience, and skills with nonprofit community. Let's start. In the previous snaps, we discussed 4 main financial statements in nonprofits under general accepted accounting principles. And those 4 main financial statements can actually give a full presentation and understanding of nonprofit activity. And those statements are: number 1, statement of financial position or balance sheet; number 2, statement of activities or income statement, profit and loss; number 3, statement of cash flows; and number 4, the last one, cash flow statement. All 3 previous statements we discussed in the previous snaps. Statement of cash flows we will be discussing today. I know it's not very favorite statements, and very often no one analyzes the statement, no one even understands that statement. However, it's there, and it is important for nonprofit to take a look at it because it's as every other statements that we listed. All of them are very important. Let me give you some glimpse in understanding cash flow statement so nonprofits can actually understand why that statement listed in their audit or review or compilation report. Or even if you run that statement in QuickBooks or your accounting software, you understand what that statement means. As you know, statements of, we're discussing here everything based on GAAP, General Accepted Accounting Principles. And GAAP requires accrual method of accounting. So what it means that we recognize revenue when it's earned or unconditionally promised, not when the cash received. And expenses are recognized when they incurred, not when they paid. So statement of cash flows represents recalculation of the organization activity from accrual method to actual cash. Why is that important? Because sometimes under accrual method of accounting, we do recognize revenue before cash received, right? And we record expenses before we actually pay them. Therefore, on a paper, nonprofit can have positive net income or change in net assets positive, but it can be actually cash poor, do not have funds. Statement of cash flow actually indicates inflow of cash or outflow of cash. And not only that, statement of cash flow breaks all cash inflow and outflow in 3 very important parts: operating activities, financing activities, and the investing activities. And it is very important to see that cash inflow from operating activities is positive. Why is that? because this is the main purpose of existing nonprofit. It's do its operation. So we want to make sure that nonprofit generates its revenue, positive inflow from operating activity, not from investing activity, not from financing activity. So operating activity includes actual operating, its receivables, payables, all these accounts that related to day-to-day operation of nonprofit. Investing activities include buying or selling fixed assets, building, land, and you can see on the cash flow positive inflow for example from selling a land or selling a building. But if the building and land were operating resources of nonprofit and they sold them, nonprofit sold the building where they located, you will see a lot of cash inflow, but it's not from operating activity. It's not good on the long run for nonprofit to sell its own building. It's actually liquidating of its assets. So you would see even positive inflow, but it will be from from investing activities. And financing activities, it's a lending, it's borrowing activity. So for example, nonprofit got $3 million loan. So you will see a lot of cash on the balance sheet and will be looking at the good cash position. But if you look in the statement of cash flow, you will see that this cash did not come from operating activity. It actually came from borrowing. It's nothing to do with the performance of nonprofit. It's just borrowing activity. Again, it's not a bad or good, but ideally we would prefer to see cash actually from operating activity. So statement of cash flow really helps nonprofit to analyze which activity cash is coming from. And as I mentioned before, we always want to see that's from direct program work, not from investing activity, not from financing activity. If we see good inflow from operating activity, but we do see outflow from investing activity when nonprofit buying building, and we can see negative outflow, but it's actually a good indicator, meaning that nonprofit generated enough cash from operating activity to actually expanded operating activity buying building. So it's a positive sign. Once again, statement of cash flow can draw a big picture what the organization does, what its purpose, and where it's generating funds from. I would recommend to management and the board members and finance folks look on a cash flow statement together with a balance sheet and income statement. They are very, very critical to analyze full scope flowing of the funds. Another thing why statement of cash flow statement is critical, because in operating section there are lines on top that indicate non-cash expenses. For example, if you look in your profit and loss statement or statement of functional expenses, any statement that lists expenses, you will see all expenses. However, some of the expenses are non-cash related. And those expenses are depreciation, amortization, bad debt expenses. These expenses have nothing to do with actual cash outflow. If the management just look overall on expenses and develop budgeting, you don't need to budget for those expenses. You need to know what expenses not really outflow. They are not actually spending cash. Statement of cash flow clearly on the top indicate which expenses are actually do not require cash outflow. And very common: depreciation, amortization, any other goodwill amortization expenses, like it could be depreciation related to fixed assets, and bad debt expense related to uncollectible receivable. And so gain losses, if the nonprofit has a lot of investments and investments generated some significant losses, unrealized losses, they also non-cash activity. Therefore, statement of cash flow as important as the rest of the statement, and I would really invite you, do not neglect statement of cash flow. It's very useful, and if you understand how to read statement of cash flow, I guarantee your board and your finance team will be impressed by your knowledge. Spend a little bit of time, learn statement of cash flow, and if you have any questions, please feel free to contact me. Thank you so much. Hopefully, I helped you today to understand cash flow statement a little bit better. Thank you for being here with me, and have a wonderful day. See you next time.